Hey there traders, it's Jeff from thestockbandit.com coming at you with another video trading lesson. So what did the market teach us today? Well, I'd say among other things it showed us how to book profits to not only make money in our trade but also reduce our overall risk in a trade. And that's something a lot of traders really don't even consider. You know, traders will generally enter a stock, they might have an idea in mind of where they ought to stop out, and they have some level in mind of where they want the stock to run in case they're right. But what they generally will ignore is that along the way several opportunities will present themselves to not only book some gains in the trade but also reduce the overall risk. And what that does in turn is increase the odds of success for the overall trade. And that's exactly what you want to do as a trader. You want to always try to find an edge and exploit that, and anytime you can increase your odds of success, that's exactly what you want to do. So we're going to take a look at that today with this lesson. This one's going to look at a swing trade, but again the same lesson is going to apply across time frames because it's based on the chart. And that's the beauty of technicals. Whether you're looking at a 5-minute chart or a daily time frame, the technical implications are the same. So apply this to your own time frame. Now don't get me wrong, the point of trading is to make money. But anytime I enter a trade, I want to first minimize my risk and then maximize the reward. And one way that I sometimes accomplish that is by setting multiple profit targets to book some early gains in a winning trade. So let's take a look at an example. Darden Restaurants, DRI, is a trade we entered on Tuesday in the member area at thestockbandit.com. And the stock had established a big gap down in December before bottoming out in January. It then created higher lows with pullbacks since then, and then more recently the stock completely filled the gap only to retreat or pull back right here in recent days. So that created a nice descending trend line, and that's the pivot point we used for an entry on the long side on Tuesday as the stock pushed up above that trend line to continue its uptrend. With key resistance overhead at the 35.30 area, the logical spot to book some gains was just beneath that level. Now obviously not every stock behaves in a logical fashion, right? And you know, we're talking about the stock market here. But again, this is about putting the overall odds of success in our favor, and that zone was likely to act as a short-term, call it a speed bump, for the stock as it continues higher. So even if it doesn't necessarily stop at that level, it may slow down there as some profit taking kicks in. So taking some shares off as the stock approached that level was just part of our original plan. Now today on Wednesday we took half our profits at the 34.80 level for a quick 5.5% gain just one day later from our entry. And now we're in a good spot. We can now hold on for a bigger advance for remaining shares, and that's going to allow us to participate in further upside if it comes. But even if the stock stagnates in this level, we've also put some extra jingle in our pocket from the first half of the trade. So today's lesson is simple but important. Look for spots to book some quick gains on a portion of your positions, and consider holding the remainder for a larger move. That style is going to help you increase the odds that your overall trade will be a success or a winning trade. And that's exactly what we're aiming for as traders on every attempt. We put your money at risk, you minimize risk, and then you seek to maximize your reward and increase the overall odds of success in the trade. I hope you enjoyed the video. Check back often for more updates, or you can subscribe to my YouTube channel to be notified every time a new video is posted. Trade well out there.